But let's get talking a little more on stocks. We have Mayuresh Joshi of Angel Broking who joins in now. Mayuresh, hi. Thank you very much for joining in this morning. First, wanted to talk about all of these stocks which are seeing a lot of impetus because of the liberalization of FDI that was announced yesterday. One sector which stands out is the entire defense space, the Walchand Nagars of the world, Bartronics, all of them rising. Your sense in terms of whether we could see any sort of fundamental change because of this? Would you be a buyer as well?
Morning, Ekta. I think what has happened probably with the FDI liberalization that the government has probably announced is going to have a positive impact on a lot of sectors, defense in particular. Again, we'll see some amount of traction going ahead. What kind of flows probably come through or which companies probably will get affected, I think it'll be a matter of time going ahead. But yes, I think it does open the floodgates in terms of greater technology probably coming through and probably acquisitions coming through in terms of the listed entities. Having said that, probably I think a few stocks are looking probably good in terms of how the revenue prospects are expected to pan out. Bharat Electronics specifically, in my opinion, should do well going forward. With the kind of acquisitions in terms of the order wins that the company has generated over the past so many quarters, our own take is that the order book should probably reach a size of around 40,000 odd crores, which should be around 4 times FY18 revenues, which are expected to be around 9,200, 9,300 odd crores. Now, Bharat Electronics is also a leader in the defense electronic space with 35% market share, with expectations of orders coming through from the Navy and the Army. The entire aspect of margin improvement or margins actually coming ahead of expectations in excess of 17.2, 7.3% by FY18 is not ruled out. So my own take is that the sales should show a growth of around 12.4, 12.5% over the next 2 to 3 years. The bottom line should grow by 13.5%. You're probably looking at a cash company loaded with cash, 6,100 odd crores. You're probably looking at the operating cash flows in excess of 1,100 odd crores. The operating capex that the company is envisaging is 400 crores odd every year. So I think it's got sufficient balance to probably generate ROEs in excess of 46, 47 odd percent. And again, I think all these triggers in terms of FDI can have a positive impact. So my own sense is that Bharat Electronics in terms of revenue growth should do exceedingly well over the next 15 to 18 months.
Mayuresh, you also look at the consumer durable space very closely, and in that it appears that Bajaj Electrical has underperformed its other peers. Anecdotal evidence tells you that the tide could be turning in favor of Bajaj Electrical and therefore you would recommend a buy?
Morning, Rima. Again, I think if you look at the business components of Bajaj Electricals, the E&P segment had been a huge drag on the consolidated performance. But what we probably witnessed in FY16 was sort of a turnaround specifically on the E&P side. So again, I think on the profitability front, it had seen significant traction. It has seen improvement in the EBIT margins as well. The OPMs actually came at around 6 odd percent. We're looking at a sizable order book of around 2,480 odd crores. The cost overruns that had been plaguing this segment is largely behind Bajaj Electricals. So my own sense is that the E&P segment should start performing exceedingly well over the next few years. The other segment that Bajaj Electrical operates out of, the consumer durable segment, the lighting segment, with the kind of government push that we've probably seen within the lighting space itself, we should witness a huge amount of traction both in terms of top line as well as on the EBIT front, specifically in terms of consumer durables going forward, as well as the lighting segment. So my own sense is that the company has probably underperformed the markets, but over the next 15 to 18 months, we can probably see a 15% top line growth. My own sense is the top line should come anywhere between 6,100 odd crores to 6,200 crores by FY18. You're probably looking at OPMs stabilizing around 6% and improving thereafter over the next few quarters. And the bottom line should show a stupendous 29-30% of growth over the next 2 years. So my own sense is Bajaj Electrical, with its distribution network, 4,000 odd distributors, it's got 4 lakh odd retail touch points, with a burgeoning economy and expectations of GDP improving, corporate earnings showing an uptick, should see huge amount of spike both in terms of how their earnings are expected to pan out over the next 15 to 18 months.
Okay, fair enough. Mayuresh, have you managed to look at IGL? It's a competitor of Mahanagar Gas, and maybe even your thoughts on Mahanagar Gas, the IPO?
So if you look at the landscape, Ekta, I think Mahanagar Gas is very attractively priced. So on the valuation parameter, it is much attractively placed compared to its peers. Secondly, I think if you look at the Mumbai market, it's got a monopolistic share going forward. And again, I think with the kind of underpenetration that we probably seen both in terms of CNG and PNG, the expectations again are that the volume growth should sustain at 7 and 8%. It's probably underperformed in terms of how numbers have panned out to the last 4 to 6 quarters or even greater than that. But clearly, I think going forward, ROEs have been quite consistent in excess of 22% over the last 4 to 5 years. You're probably looking at a cash-rich balance sheet again, no debt on their books. You're probably looking at a dividend yield of more than 4%. And all these factors, in my opinion, should play out very well. Again, in terms of supplies, 86% of its gas supplies are coming at administered prices at 3.06 MMBTU. So that's becoming a huge advantage in terms of how their cost dynamics pan out. For Indraprastha Gas, I think the valuation parameter compared to Mahanagar probably a little bit more expensive. But my own sense is that it is so attractively priced at this juncture that I think the stock will get subscribed quite reasonably. And again, I think the prospects in terms of their top line and bottom line look quite reasonable because of the kind of underpenetration levels that we've seen both in terms of industrial users as well as the local consumers here in Mumbai.
Okay, Mayuresh, always a pleasure getting your views in. Thanks so much for joining in. So that's the word from Angel Broking. Let's slip into a very short break.